Welcome to today's Snap session, Investing in Consumer-Based Properties, What's Next for Retail, Hospitality, and Mixed Use, brought to you by Walker & Dunlop. I'm Jessica Fior, Managing Editor of Commercial Property Executive, and I'm talking with Stuart Saft, Partner and New York Real Estate Practice Group Leader of Holland & Knight, to discuss the outlook for consumer-based properties for when businesses begin to reopen and beyond. Thank you for joining us today, Stuart.
Jessica, thank you for having me.
Of course. And before we dive in, I just want to let everyone know that we're going to leave some time at the end of the session to answer your questions, but please feel free to submit them at any time during the webinar. You can do this by typing directly into the chat feature in the webinar interface on the right. Also, we're recording this session and it will be available for later viewing. So let's dive right in. We're talking about a few different property types today, all of which have a consumer focus in common. As some of these properties start to reopen, what are some of the biggest liabilities for owners?
The issue of liabilities has different aspects to it. The first, of course, is liabilities arising from the coronavirus itself and preparing the facility for customers and the residents to return. And in point of fact, early in the outcome in the coronavirus attack, I spoke with members of Congress about including within what ultimately became the CARES Act, a general indemnification for all hotels, cruise lines, dorms, retail establishments that were serving the public out of a fear that subsequent to the attack, there would be wholesale lawsuits started against all of the facilities and the owners of the facilities and the tenants of the facilities, and it would be a field day for tort and class action lawyers. As it turns out, nothing was included within the CARES Act with regard to this, but this morning I read that the President and the Senate on negotiating additional aspects of the CARES Act, and this time they're focusing on the issue of indemnification and limiting liability of owners and operators of facilities. If there isn't federal legislation, of course, then it's up to the various laws of each of the individual states, and you can be operating a facility in California and then wind up getting involved in a class action being brought in Alabama and be in front of a hostile judge or jury. So the issue of indemnification is very important. On top of that, there's the liability having to do with if the facility is based upon a lease, what the liability is to the landlord of the facility and the tenant of the facility and the customers of the facility. And there's also potential liabilities from an indirect cause, a product that's being sold or a food that's being sold has aspects of it that turn out to be dangerous. So there's a whole panoply in play of potential risks that there has to be concern about, and I think that that's something that has always existed. It's magnified now because of the danger of the coronavirus, but it is something that will have to be taken into consideration. And my guess is, going forward after we get through this, that we will be far more concerned about these health-related risks in every business and professional environment. And I know that as Americans, we've seen photographs for years of people in Asia wearing masks while they're out in the street, and we see people coming from various places around the world, getting off the plane wearing masks, and we've wondered, why are they doing that? And I think that one of the lessons from what we're living through right now is that being prepared for this type of situation is far more important, and we will see people wearing masks certainly for the indefinite future, even after the pandemic eases, because of what we've now gone through and the health cautions that everybody has had. So it's
I know
something.
Sorry.
Yeah, I'm sorry.
I said I know I've had to wear masks recently at picking up prescriptions, and we've had to wait online. It was very well marked off, 6 feet apart. How extensively will owners need to make changes to their properties? Do you think it'll all be topical, like just putting tape down for customers, or is it going to be a larger scale?
I think it's going to be larger scale. I think we need to rethink, in light of what we've learned, exactly how to do this. And I know office buildings in Manhattan right now are doing just that. They're putting tape down on the floor of the elevators, so not more than 4 or 6 people can get on at a time. They're putting tape down in the elevator hallways and in the lobbies in order to keep the social distancing in place. And certainly, while this virus is still expanding, no one can stop thinking about these health effects. And I think that as we move forward, that it's going to be part of our planning. And I think one of the key elements for all of us is we're learning lessons today, and we have for the last 2 months, on how to deal with the pandemic and how to protect ourselves while this occurs. And we have to keep notes. We have to say to ourselves, okay, so I walked into this pandemic totally unprepared. This is what I've learned, and this is what I now need to keep in my house, in my office, in case this happens again. I know one of the first things that I did when the pandemic started was calling Home Depot and getting a freezer for the garage, something I thought about for years, but never actually did.
That's smart.
And now I did. Yeah. Oh, I think you have to.
Yeah. And I think for years we're going to be seeing the effects of that. And then in terms of the investors, what do you think their biggest concerns are going to be? Obviously, besides the lost revenue that they're seeing right now, but as they look forward and they consider retail and mixed-use properties, what are they going to be, looking for, or concerned about?
Well, I think it's how to get the customers back, and that feeds into B. What changes do you have to make in order to bring the customers back, and C, how to keep it safe going forward in the future. This is a once in 100-year pandemic, but we have to learn from it. And one of the things that I've been thinking about has to do with hospitality properties. And right now, the whole hospitality industry is suffering because nobody's staying in hotels. We have tens of thousands of empty hotel rooms in New York. Disney lost 60% of what the revenue they expected because the parks are closed. And what I came to realize, and this is interesting, is that most hotel properties don't need significant changes because they've been in the business of providing sanitized rooms for in their hotels for 50 years, 100 years. The problem that the hotels have is how to get customers to the hotels. In New York, for instance, last year, there were 60 million tourists who came to New York to stay in the hotels. And the problem right now is tourists aren't coming to New York. The same is true in South Florida, in Orlando, in any place where there's a lot, and of course Vegas, in any place where there's a large number of hotel rooms, the hotel rooms are clean, and they're cleaned on a daily basis. Now, certainly,
that's always good to know.
Oh, absolutely. But what's going to happen now is that there's going to be a standard created as to how the hotel rooms has to be cleaned, and there'll be some sort of a bureau that the whole hotel industry will probably create to say that here's the hotel standard seal of approval. All the rooms in this hotel meet it. The problem is how to get people to the hotels, and that means that what we really have at the end of the day is a transportation problem. For the hotels to move, for instance, and retail and restaurants to move from where they are ordinarily to a heightened sense of safety is not as great a step or big a leap as the transportation facilities need to have. Somehow, the airline industry has to figure out what to do to their planes in order to protect the occupants of the plane as they're flying from Europe to New York, from China to California, or wherever anybody's going. And the key to getting business back to where it was and getting value up again for all of these consumer-related properties is fixing the transportation industry, and that means the airlines, the cruise ships, and certainly mass transportation within the United States, the rail lines and the subways. That's where there needs to be a tremendous focus on playing it safe. New York City could open quickly if not for the fact that most of the people working in Manhattan commute in on mass transportation from elsewhere in the city, from New Jersey, from Connecticut. And the slowness of New York reopening is because you can't get large numbers of people in if they're going to take their cars and drive instead of being able to take mass transportation. So that's where the focus has to become. Yes, we're going to be wearing masks for a long time, but in order to bring value back to retail and hospitality, you need to be able to make people feel safe when they go in. And of course, what I've heard is that the restaurants are going to have more room between the tables, which means fewer customers, which probably would mean that prices have to go up. These things have to be factored into the mix. But I think we're heading in that direction. There's still value, and it's just a question of how to maximize the value coming from this. I think one of the things that's going to grow out of this experience is tremendous number of people have been now home for 2 months. They've been ordering material from Amazon and other delivery services. FedEx trucks are all over and UPS trucks are all over. And local merchants have to figure how to get into it. Now, we've seen the supermarket chains and the restaurant chains are now delivering to their customers. And I think that's going to take us back to a situation where you're going to be a customer of your local supermarket, and the supermarket's going to keep track of, which they can easily do, the kinds of things that you buy, and then the supermarket will reach out to the resident, Mr. Jones, and say, for the last 6 months you've been buying X, Y, and Z. Would you like us to deliver to you these products that you regularly utilize? And whether Mr. Jones is now staying in the house full time, or is back working, the local merchants are going to find that they can rebuild their customer base by being able to deliver that kind of service on an ongoing basis. So life is going to evolve based upon what we've learned and the care we need to take going forward.
Right. And so if people are looking to sell from a legal perspective, they're looking to sell their hotels, their retail. What do you see as the biggest issue for them in this new normal?
Well, if certainly if they're trying to sell right now, it's going to be a buyer's market, which is what happens whether it's a recession or a pandemic or any other cataclysmic event, and so the price is going to be affected. There's this old adage in real estate that it's all about location, location, and location, but that's really not true. It's all about location, timing, and use. And
it's not as catchy.
No, you're absolutely right. It isn't, but it's not only about location. Right now you have empty storefronts all over Manhattan that previously were renting out for $5,000 a square foot, and now the space is currently vacant. So if somebody's going to sell now, they can absolutely sell, but it's the price that's going to be affected. And I hear this all the time. People say, I couldn't sell my property. And what they're really saying is, I couldn't sell my property for the price I wanted, but there certainly would be a price for which it could be sold. Now, if somebody is offering to sell something right now, the price is going to be heavily discounted because of the current environment. But there's still tremendous value in all of these assets. It's just a question of having the ability to wait to get to that point. And in many instances, the value of the property is probably at this moment less than the debt on the property, because there's always, in good times, leveraging that's going on. Real estate, as everybody on this call know, is an illiquid asset. So the only way you can get liquidity into your real estate is by financing it. And with interest rates low for the last couple of years and ridiculously low right now, there's been a lot of financing and refinancing going on. So you really need the cooperation of the lenders if you're trying to sell a property now, and the prices you get or offered are significantly less than the debt on the property, and then of course you have to deal with the tax consequences. But if you have the wherewithal to wait a couple of months, then once we get past the worst of this, the market will recover because the economy is fundamentally strong. Yes, there are 30 or 40 million people who are unemployed right now, but they're unemployed only because all the businesses have closed. And so at the point when the business is open again, people will be reemployed. So it's just a question of whether or not you have the ability to hold on for perhaps 6 months. Now, I'm not saying that the coronavirus is going to continue lingering around for 6 months, but you need to have a period of time where people feel more comfortable after the virus is behind us. And so you're probably going to see a soft market through the balance of 2020, which will then pick up again in 2021. And it's just a question of trying to identify really good opportunities, and a really good opportunity is one not that you're going to have a terrific return on something you purchased today, but that you're likely to have a fabulous return 6 months from now in 2021.
Oh, wow. That's really interesting to think about and so important. Looking at the time, I want to give everyone a chance to ask their questions. So I'm going to turn this over now to some questions from the audience. Let's see. So many companies have been successful in having a large number of employees working from home, such as Goldman and Sachs, Standard and Poor's. They stated over 90%. How will this impact the entire real estate market in New York?
I don't think it's going to have a significant, I know this is going to sound crazy. I don't think it's going to have a significant impact because there's a very real synergy from people working together physically. And I know I sort of, on February 13th, my law firm closed the New York office and we all started working remotely from home. I had the Holland real estate practice group, and we have 40 attorneys and paralegals that are part of our practice group. And so I assumed that when on the night of March the 13th, that this would result in people saying, you know what, we don't really need an office. We don't have to go back to Manhattan. We can work remotely. And I figured that the landlords were going to have an even bigger problem than dealing with WeWorks, and that was companies deciding they don't need to have bricks and mortar space. Now, what I did is I wanted to keep the camaraderie of my practice group together. So at 9 o'clock every morning, I have an open conference line, and anybody who wants to call in calls in, and we sit and talk. We could be talking about the law. We could talk about the weather, and the conversation goes in all kinds of incredible directions. And we get about 25 people a morning out of 40 who call in religiously every morning at 9 o'clock. Many of them don't say a word, but they just want to have the knowledge that they're part of something larger than sitting in their apartment or their house working by themselves. And so we've seen this evolve over the last 2 months. And the one thing I hear repeatedly is the fact that everybody wants to get back to work, that get back to the office, that as nice as it is to have all this time with your children and your grandchildren and your spouse, there's still a certain rapport that comes from being in the office and that environment, and ideas get generated that don't happen when people are located in 40 different locations. One of my partners, in fact, who commuted every day in from New Jersey, has stated, to the surprise of all of us, I would do anything to be back on New Jersey Transit.
Yeah, I live in New Jersey as well, and I was saying I'd never thought I'd miss my commute, but, now I'm kind of dying to get back to the office, and hopefully a lot of, people in real estate and the hotels and the retail centers, if I could go to a mall now, that would be my heaven. So speaking of which, another question, shopping centers are being filled with entertainment and local restaurant tenants without substantial enough balance sheets to withstand an economic downturn. How will landlords overcome this looming challenge?
I read also this week that there's a bill that's been proposed by Ohio Senator Sherrod Brown to allocate $100 billion to give tenants the ability to pay their rent during the virus. And that's critically important because that means the landlords would be getting rent in, and that the rent would then be utilized to enable the landlord to pay the debt service on their debt and the real estate taxes on their real estate, and keep the system going. And I think that makes a tremendous sense. I was really impressed when Congress was able to put aside their partisan differences 6 weeks ago and passed the CARES Act. And fundamentally, what it's all about is getting $2 trillion back into the economy. And it was an unusual response because It was an identification that we need to have money in the system to get the system to operate. Now, everybody talks about the Great Depression, and one of the things that people don't realize about the Great Depression was that when it happened, the government thought that there was too much money in the economy, and that if they could get money out of the economy, it would somehow cure the problems that were existing. And so they started out dealing with the Depression by reducing the bank's ability to lend money. And we've learned over the last 90 years that that's not the way to deal with a calamity. The way to deal with the calamity is get more money in. So the Fed lowered interest rates immediately. The Fed made more money available to the lending institutions. Congress has had this $2 trillion act, and my guess is that we're gonna find that we need another trillion or $2 trillion in order to support our shopping centers, in order to rebuild the infrastructure for our hospitals, which has been decimated by the fact that they've been taking care of all of these patients without saying you can't come into the hospital without insurance. And so the hospitals also need support. And there was something built into the original bill, but it's not enough. So my answer to your question is there has to be additional funds coming out of Washington in order to keep the malls operating, in order to keep the office buildings functional. But we're seeing a kind of maturity in this financial crisis different than ever before, because instead of what usually happens, pointing fingers at each other, the answer this time is let's get more money into the system. And the whole idea behind the payroll protection plan, the PPP, was that if the government is willing to basically give companies the money they need to pay their payroll for 3 months, then the companies won't lay off employees, and then people would have the money with which to buy things and go to malls. And of course, the malls aren't open, but we'll have money available. And so, who figured that they'd have this PPP program where the government would be giving out $350 billion over a 3-week period of time to support payroll. But these are the kind of innovative solutions to the problem that we're seeing, which will enable business to survive what would otherwise have been just an absolute horrendous economic situation.
Oh, yeah. And we have time for one more question. Do you foresee an exodus to suburban offices with people at home looking to avoid to avoid destinations and keep distance from major cities like Manhattan?
No, I don't, because the beauty of major urban areas that you lose in a suburban environment is the ability to have a lot of different businesses and professionals and support personnel in the immediate vicinity. So it's nice when you have an office park in a suburban area, but you don't really have access to all of the know-how, the ingenuity, the support personnel, and the labor pool that you need for modern business. And of course, if you're a huge tech company, you can put yourself in any suburban community that you want and be successful. But I think that there's still a need for large urban areas that support the entire business community.
Oh, sure. That's very interesting. Unfortunately, we're out of time. But Stuart, if anyone has any questions, is there a way they could reach out to you?
Yes, email. It's my email address is stuart.saft@hklaw.com.
Okay, well, thank you again. Thank you to our sponsor, Walker and Dunlop, and thank you to everyone who joined us today. Again, you'll receive a notification when the recording is available. And please do make sure to tune in to our next SNAP session. It's going to be May 21st. Thanks again to Stuart Saft of Holland and Knight for a very informative session. Take care and stay safe. Thanks. Bye.